Only 66 participants, or they haven't been let in yet?
Yeah, this is everyone who's here for now.
That sucks. It's not even worth doing this. Hi guys, welcome to the webinar. My name is Mark Shawson, the pattern trader. I'll be starting in just a second here. Get everyone a chance to get started, get situated. Hopefully you're seeing my screen. So welcome to the webinar. This is a 4-day live trade execution webinar series. I've kind of subtitled it, How to Capitalize on Monster Moves in the Markets. My name again is Mark Shawson, the pattern trader. And today I'm going to talk about, how to make money exclusively using price patterns and price action. So I'm very often asked the question, do I trade the news? And the one word answer simply is no. So I trade everything based on just a picture on a screen. A simple chart. I use no indicators. I'll go into everything in just a moment. Before I do that, perhaps I should digress for those of you who don't know me. I started my trading career more decades ago than I care to acknowledge or remember. I was a young buck. I was in my second year of college at University of Southern California in Los Angeles. I was studying business. And I was being taught, in my business classes, how to analyze investments based on what we call fundamental analysis. So fundamental analysis is based, everything, if you're looking at a stock, the price earnings ratio, the inventory sales ratio, the management, these are what's called fundamental analysis. And right around the same time, my dad was doing business with an investment banker by the name of Graham Loving. You couldn't make that name up. Graham Loving was a kind of an idiosyncratic character. He actually wore an eye patch on one eye. And he was a very smart number crunching kind of guy, very quiet, introverted guy. And he was helping my dad raise money for a drive-through animal park called Lion Country Safari. Actually, those parks are still around today. But quietly on the side, Graham was actively trading the commodities futures markets. Orange juice, cocoa, live hogs, cattle, soybean oil, gold, silver, interest rate futures, about 30 different markets all at one time. Now, this was during a time where the markets were literally going nuts. It was in the late 70s. It was the first time interest rates went to 21%. We had inflation over 10% in the United States. You had 2 oil embargoes. And the markets were going crazy. This was the first time gold went to $1,000. So you could bet on soybeans or pork bellies or what have you, and they were all going to the moon. And so it wasn't really, not only that Graham was making so much money, but it was how he was doing it. So he was juggling all of these markets, just looking at the price. And in those days, we didn't have fancy charting packages, online charting packages. Basically, he got a piece of graph paper out, drew an X and Y axis with price and time, and then every day just charted the closing prices of live hogs and cocoa and orange juice. And he said, Mark, very simply, I want to buy a market that's going up and sell a market that's going down. And so to my simple-minded way of thinking, this made perfect sense. And I'm a very visual, very aesthetic person. And so it was from those early days with Graham that I really was captivated by what we call technical trading. Technical trading is basically trading premised only upon the observation of price and price action. And I'm going to show you a couple of moves, trades that I've made recently and in the past that I've made, hundreds of thousands, even millions of dollars on individual trades based on the simple observation of price patterns. So I've built over the years kind of a a 4-step process that starts with identifying the trend, identifying a pattern. Once I understand the trend and the pattern and which way I need to be faced, then I look at what I call my key reversal or my inside day bars, what I call my insurance day bars, and then I layer it with an execution plan that requires me to put a buy stop above the high of a market I'm trying to buy and a sell stop under the market I'm trying to sell. So hopefully before this webinar, you should have got something from our team, a basic kit on basic chart patterns. Now I'm going to show you a couple of chart patterns that you can find anywhere. And I'm going to show you how just the simple observation of those patterns is all you need to make a monster amount in the markets. So people say that Keen says he can't hear me. Are you guys hearing me okay? Dwight, are you hearing me okay?
Yeah, you're just fine, Mark.
Okay, so somebody said that.
Loud and clear.
All right, so I'm gonna basically just share with you some trades I've made recently, and you'll see how I do it, what I do it, and then I'm gonna go into the markets and analyze the markets live and overlay this analysis so I can get you more acquainted with what I'm doing. So here's a trade I did just last week, where you can see right here, this little blue area, I didn't label it, but this is what's called a double top, where you make one peak, you back off, you retest that peak, and then you have this M formation, this double top. And then after it dropped out of bed, it kind of started going sideways, formed this ascending triangle. But so once I understand what the governing price pattern is, so let me just kind of draw a better idea of what I mean. So this is Moderna, ticker symbol mRNA, the famous medical, vaccine company. So here is what I call my double top, where it went to one peak, backed off, went retested, and now you have this M top. And actually you had this peak over here. So it was actually a triple top in this area. So once I understand the market is topped, then there's only one way for it to go, and that's lower. So you can see that after it topped and fell out of bed, it started going sideways for a while, formed this ascending price pattern. And you can see it started getting to the very business end of it. And this was the day before earnings were announced. And so this is a very speculative way. Sometimes I look at the chart patterns and take a bet before the earnings are announced. And in this case, I sold 6,000 shares at around $342. And the next day it opened $60 lower. And I made $324,000 profit. There should be an extra zero there on this trade in one day. And so it was on the observation really of what I call a governing price pattern. So this price pattern right here, the double top right here, governs and dictates what this market is going to do weeks and months into the future. So once we understand what the governing price pattern is, then we can face ourselves in the direction that the market is going to go. And so that was in Moderna just last week. And this was, my P&L, I show exact verification. I have a very active trading account. You can see I started getting short. It says sell short here at 340. I sold 3,500. Then it actually went up. I sold 1,500 more, 339, and then it went higher. And I sold more, 342. So I sold 6,000 shares around the 340 price area. And you can see I started bailing out at 281, 292, 288, and I made over $300,000 in just one day in Moderna last week. Now, also last week was a busy week. It was an active week. I was trading this small stock called Oxygen. It was also a biotech company. very speculative, these biotechs, because they look for approval, and then if they don't get it, they fall out of bed very quickly. So I just started seeing that we started getting a support area here. There was an area where there was a double bottom. This had a key reversal, made a new high, closed on the low, but then it started going higher. So I started, buying against this key reversal, and I bought it in the $9 and $10 area, and actually made about 7 figures. So this is only from one account. I did this across 2 accounts, and I think I made close to 7 figures trading OCGN. You can see in this period, I bought about 50,000 shares at 9, 969, 950, 886, 929. And it went over $16 last week. So I was very actively trading OCGN last week. This is the price chart of a QuantumScape. QuantumScape went up quite a bit today, but in this particular area, it was going down. I identified a number of bearish price patterns. These double tops, you can see all the way down in the stair step downtrend. I started getting long right there on those 2, what I call key reversals, where the market makes a new high, closes on the low. I got short right there at $29.75 and rode it all the way down to $24 and made about $400,000 in that particular juncture. So you can see that's my very active trading. I buy the options, I buy the stock. So this was some put options where it's a leveraged bet on a stock going down when you buy a put. So I was buying puts on QuantumScape. I was making over 54 grand in that particular thing, and also very actively trading in many different accounts in QuantumScape. This was a 7-figure trade that I made in Beyond Meat, ticker symbol BYND, where this is kind of an example of an email that went out to all of our members on what we call the Elite Program. After this webinar series, if you're interested, our team will and kind of enlighten you as to the Elite Program if you're interested in it. And so this is the way the email goes out. I basically show you what I'm looking at the chart. I draw exactly the patterns and the price action, and I'll go into the live chart and show you what I was looking at. And I give you a very direct entry. So I said, put a buy stop at 120.5, your stop loss there, take profit there. And then I will modify the stop loss and take profit if things start going in my favor, which I did. I eventually got out of this around the 150. I made 7 figures in this thing because it crashed. Then it went above there, created a bear trap. And I said, this bear trap has been sprung and prices will rocket higher very quickly. And that's exactly what they did. So you can see I bought 5,000 shares around 120. You can see right around this time it was trading at 139.5. I was up about 83 grand in that. I bought these call options for about $1.55. I bought 277. I was making $394,000 in that particular call on BYND in that account. And in these other accounts, I bought this at about $1. You can see they were trading at $19. And combined, I made over 7 figures in 3 days on BYND. So these are real accounts. This is not a demo. This is as real as a heart attack. And these are my personal trading accounts. I also trade Forex, currencies, gold, what have you. This was the pound New Zealand dollar, where I was telling our members to start buying it at 196. Also adding to the thing at 196.87. I got out of these. I made about 140 grand. You can see here are the pound New Zealand trades in pound New Zealand. I was up about 140 grand in that. This was an area in gold in late January. This was in one of our emails where I sent out an email in gold to sell gold at 1867 based on an ascending broadening triangle. I said in my email, my target objective is $1,700. This thing actually went to 1687. And you can see I added to my trade. I said, add to your trade at 1797. So I had 2 trades in gold and ended up making over 600 grand as gold went below 1700. Here I got out at 1687. and pocketed a nifty amount of money. This was in late January. I'd just come out of an operation, and I was in my hotel room, and I saw this setup in Lyft. I was looking for this thing. I was waiting for it for about a month. I put a buy stop in at 45.83 based on a double bottom there. And then I was also long the common stock and then the call options, the $46 call options. And I also was long the $47 call option as a leverage bet on the upside. And this is my brokerage thing. It's not as nifty as a Forex thing where you see the buy and sells together. So here's all the areas where I bought the stock at $45 and blew it out at around 58. I made about 90,000 in the stock. Here you can see I was buying the $46 calls for 92 cents, and I got out for $7 and made over 760% on that. And then the $47 calls I was buying for $1.10, and I blew those out for $6. So in this period of time, I made probably over $250,000 just on a 1 week play in the stock of Lyft. So this is what I do. Doesn't matter what the instrument is. I'll trade gold. I'll trade the pound New Zealand. I'll trade anything with a chart pattern. And, today I put out a recommendation to sell this company called Teledoc in my email tonight. And so, I'll kind of walk you through my thinking. So this is the stock of Teledoc. So to me, it's all premised based on the observation of the instrument that I'm looking at. And again, I will trade crude oil, I'll trade orange juice, I'll trade anything under the sun. The questions I say to myself, when I open a chart, I say to myself, is this thing going up or, is it, going down? Is this in an uptrend or a downtrend? And, once I kind of understand what direction it's in, then I kind of look for a pattern to bolster what I'm looking at, and say to myself, is there a pattern here? And to me, there's something called a head and shoulders, which looks just like a man or woman's left shoulder. The peak is the head, and that's the right shoulder. So this is a bear price pattern. And so once I understand that we are in a downtrend and you have a very bearish price pattern that also suggests that prices are going to be pointed lower, then I try and find an area where I can join the trade as it's about to get started. And the way I do that is I use price action. So it's really a four-step process. So the first thing is, what is the trend or the phase or the direction of the market? Is this going up or is it going down? So that's the first thing I try and I look at a chart and open it up and assess what it's doing. And then I say, is there a historical chart pattern? And, I typically look at daily, monthly, or weekly. People say, well, can I look this on, on an hourly chart or a 4-hour? You can. But what I'm trying to do is extract the bigger moves in the market. And in order to do that, you need to look at periods of history. So I am just trying to get pieces out of the middle of sizable moves. When the market moves sizably, I'm just trying to take a piece of that. So if this is going to move down, I just want a piece of the middle of moves. And in order to do that, you cannot see this. So I'm looking at, many years of history on this weekly chart that you simply cannot see on a 15-minute chart. Sorry about this bad, writing here. But so once I understand the trend, if it's up or down, or if there's a chart pattern, then once I've determined what the trend is, what the direction is, then I look for my insurance day bar. Insurance bar. Now, the reason why I call this an insurance bar is that when I see these bars, it tells me where to get in the trade and what my risk is. And that to me is really the holy grail of trading. There's no guarantees in trading, but if you can kind of assess your trade with the idea of where to join the momentum and understand where the risk is, that to me is the closest thing to the holy grail. And to me, an insurance bar is two things. It takes the form of either what I call a key reversal. Sorry, a key reversal is, and what you'll notice here is that there's nothing on this chart but price or time. There is no volume. There are no moving averages. There is no MACD. There's no Bollinger Bands. There is no what we call indicators. I just use a very clean chart. From this picture, I can make risk and reward assessments and determine how to set up a trade based on risk and reward. And so a key reversal basically is what it sounds like. This is where a market goes from one level to the other, makes a new low in intraday, and then by the end of the day, it closes on the high. Now, this is a weekly chart, so this would be a close, at the high of the week. So what this says is that, the market went to a new low. By the end of the week, the buyers were in control. The key reversal is also the opposite, where one part of the week, it goes to a new high and closes on the low or toward the lower end of the week. Now, I don't look at these in a vacuum. I look at it in connection with the trend, the pattern, and everything else. And so what we see here is this key reversal right here on Teledoc, where you see the head and shoulders, you see the downtrend, and then last week we made a new high and then closed on the low. So what this tells me is that this is very likely my risk area, that, I'm kind of, based on the look of this, I'm surmising that this is my risk. So if I got short here, this is basically my risk, and that's, potentially my reward. And so when I look at this key reversal bar, I can say basically, all right, I'm going to put a sell stop underneath here. This is my risk. And now once I understand the risk, then I'm just going to observe how the market, starts playing out. I try and set up trades where I have an advantage, or at least a 3-to-1 risk reward calculation. And I'm getting into a lot right now, and I'll talk more about risk management tomorrow, because I think this is a big portion that people don't understand. And everybody romanticizes where to get in a trade and how much they're going to make. But to me, if I can understand where my risk is, then the trade, the outcome will take care of itself. So I try and understand how to get in a trade from a point of view of risk, and then the rest will take care of itself. So that's one example of an insurance day bar. Another example is what I call an inside day bar, where you can see literally this particular bar from high to low sits within the range of that bar. And the same thing here, where what we're saying is basically this is what I call, an inside day bar or narrow range bar or a coil, where you can see from high to low, that sits within the high and low of that particular week. And you'll see this now on the daily. When we go and look at the daily of Teledoc, you'll see there today was a very little narrow range inside day bar. And what these inside day bars tell me or suggest is that, to me, it's just a coiling. It's a suppression. It's a building of energy, right? So you're just building energy. To me, it's like I always use the metaphor of a beach ball. Like picture if you put your hand on top of a beach ball and press it further and further underwater, and then you leave your hand off, what's going to happen? The energy is just going to uncork. And so this, to me, is what these inside bars represent. They just a building of energy. And to my mind, then it will just uncork in the direction of the trend. So we have the key reversal bar and the inside bar. And I'm going to show you right now on the daily chart exactly what I mean. So once now I see my trade, I have the direction, I have the pattern, I have my key reversal, my insurance day bar. Then I simply layer this with an execution plan that says, okay, I'm going to put a sell stop right under that low. So the fourth step is a trade execution. Once you've kind of made your analysis, now what I do is I require the market to validate what I'm looking at. And so in this area, I would put a sell stop. And if I wanted to buy something, I would put a buy stop, which is just a resting order above or below. And if you don't know what that is, I'm not going to go into the mechanics of it. Just, look up your broker, go to YouTube. But basically, if I'm looking to buy this market, I would just put a buy stop right above that setup there. A resting order that requires the market to, if it opens the next day, goes down. Once it goes up, now it just puts me in, and now hopefully I'm put in a market that's ready to go. So this way, I don't have to sit in front of a screen till my eyes bleed. I don't have to look at some 15-minute chart with some Bollinger Band, wait for some crossover. I have my setup. I put my resting order in. I go to bed. I go and have dinner. I go ride a bike. I let the market, do its thing and put me in the market. So let's say I put a resting order there. The market opens and goes, straight down. Well, the great thing is I'm never put into the market. It wasn't confirmed. And so no harm, no foul. I just cancel my resting order and go and look at something else. Same thing with a sell stop. So if I'm looking to sell a trade like this Teledoc, I would simply put a sell stop, underneath these lows. And again, wait for the market. If the market goes straight up, I'm not put in, and no harm, no foul. But if on the other hand, at 2 o'clock in the morning or what have you, I'm put into this market, now I'm automatically put into a good trade. So it's really a 4-step layered approach that gets me closer and closer to the bullseye of a high value trading opportunity. So does everyone understand this? I'm just going to stop here, make sure that. So Natisha's all this on a daily basis. So in this particular thing, this is a weekly chart. So you could basically put your sell stop under the low right here on this weekly. So this is, each one of these price bars represents 1 week in time. So basically on Monday morning or Sunday night, whenever your broker platform opens, you could put in, a sell stop in, Roku at 145, and that's it. Leave it in for the week, and it may, go up, Monday, Tuesday, Wednesday, and then Thursday it hits your sell stop, and now you're in the market. You don't have to watch it. You don't have to monitor it. You just have a resting order that's just sitting there waiting for, the market to get triggered. And I've had that. I remember doing a Japanese yen trade where I put my order in on a Sunday night, and it didn't trigger till Wednesday, and I was put into a $500,000 trade. So everybody's basically confirming they understand, which is awesome. So I guess you don't need me. I can just close down the webinar. So let me look at Teledoc on a daily, and then, I'll show you what I'm looking at. Let me just blow this up a little bit. So now we understand that, we saw the head and shoulders, and we, saw the pattern and the direction. I'm just blowing this up into more of a microcosm. Obviously, you can see here that this market has gone straight down. And, what I like to do is put a structure around prices. So you can see basically prices have just been in this meandering phase. It could go up, it could go down. But what I like to do is put kind of a structure around here. So connect the recent highs, connect the recent lows, and you have this descending triangle. And then recently, you broke out above here. But to me, this looks like a false breakout. It looks like a bull trap, where all the bulls that chase this breakout are going to be trapped, and it's likely to turn the other way. because this looks like a downtrend. And so here you see this key reversal here, made a new high, close on the low. And then this was today's range. Literally, this was today's range. This, I mean, probably the narrowest range I've seen in a long time. And so you have an inside bar, a narrow range bar, and
Hey everyone, so Mark froze, so he will be back in just a couple of minutes. Hey everyone, so Mark lost connection. We're working to find out what's happening, so hang tight for a sec. All right, everyone. So Mark is rebooting his internet. It's going to take him about 10 minutes. So you guys can grab a sip of water and be back in around 5 to 10 minutes. Hey everyone, just a reminder for those who weren't here. Mark is rebooting his connection, so he'll be back on in a few minutes.
Hi guys, sorry about that. I have no clue what happened. My computer just crashed on me. Dwight, can you hear me okay?
Yeah, I'm hearing you just fine.
Okay, everybody cool? Okay, sorry about that. I have no clue. Just froze on me from one moment to the next. So let me kind of go back to what I was saying about Teledoc on the daily chart. So I'm not quite sure what's happening here. All right, here we go. So I apologize for all of this. Oh, sorry, give me one more second. Sorry, I just need to get a key for another of my programs. Sorry, everybody. When it rains, it pours. Okay. So this is Teledoc on the daily chart. And we're just kind of looking at this through the prism of this descending triangle. We had a breakout here, which I think will be a fake breakout based on the prevailing trend. We have this key reversal right here, made a new high, closed on the low of that day. And then today, we had an absolute, I mean, infinitesimally narrow range day. Now, the beauty of these narrow range bars is that your risk is necessarily very small. for a pretty good outcome. So it's not going to take much for you to see if this is going to work out or not. So I would simply sneak a sell stop right under these lows, about 50 cents away, 146.75. And then you could put your stop loss, $2 or $3 higher. So you could literally have a $2 or $3 risk for what could be a $30 trade. And so to me, this is what I look for. I look to identify risk reward opportunities. So what most people are doing is that, for instance, in this Forex markets, most people are trying to take out 7 pips or 10 pips or 15 pips or what have you. And the same thing in other trades where you're trading very short term, you're trying to extract these very small outcomes. So if you're trying to, take 15 pips out of a trade, you're probably risking 15 pips, and that's a 1-to-1 relationship, which means that in that kind of case, you have to win 90% of your trades. And this is why most people are losing, certainly in the Forex arena. I'm going to talk about risk tomorrow, but 90% of people are losing their money in Forex within 3 months or less, because I think they're looking at too small horizons. They're looking at 15-minute charts and then trying to take out 7 pips, 10 pips, and do it 5 or 10 times a day. And the more you trade, the more chance you're going to lose. So this is a 1-to-1 correlation. What I try and do is I try and set up trades where I have a 3-to-1 risk reward, meaning that if I'm going to risk 50 pips, and that's the minimum that I'll risk in it, I need to have at least 150 pip outcome. So that's a 3-to-1 risk reward. And you can actually lose 72% of your trades if you set up your trades this way. So if you take a trade like this and you have a $3 risk, for a trade that you could easily make $10 or $20 on. So let's say you make $15. Let's say you risk $3 and you make $15. That's a 5-to-1 risk reward ratio. That means you can lose if you can win 5 times what you risk, you could lose most of your trades if you set up your trades like this. So what I try and do is identify trades with the least amount of risk for the most amount of outcome. And Teledoc seems to really fit that bill. It will really confirm if we start coming back, in the geography of this triangle under 140. So we're right now 146. It could still futz around here. Maybe, it continues higher. But if this thing starts coming back, into this area again, then it's, very likely we will kind of re-enter this thing and go much lower. So this is what I try and look for on my trades, where I understand the trend, the pattern. I try and find my insurance day bar in the form of a key reversal or an inside bar, and then set up a sell stop or a buy stop, under the high or low of that trade. So does everybody kind of understand the principle? So Nemanja says, could you repeat a sell stop at which price? So here is the parameters of Teledoc today. Let me just put it here. So if the market's closed, Teledoc closed at 150.46.24. And so the low was 145.57. So I would put a sell stop, under this low at 145.50. And then you could put your buy stop above this high at 147.5. So you literally got a $2 risk for what could be a $20 trade. And so this is how I look to set up my trades on a continuous basis. I'll just walk you through. These are the trades that I sent out yesterday. So again, this is the format of my email. So this was yesterday's email where I kind of give you an overview of the dollar index, the gold, the whole thing. So I had a kind of a sell limit, which I don't usually do in the euro yen. Then I had a sell stop in Beyond Meat, BYND. This reports earnings on Wednesday. I think there's a good chance that this stock could crash this week. And so I put suggested you put a sell stop in that. And then I put a buy stop in gold. And here is, well, I have to reopen my platform in gold, but I'm making about 500 pips in gold based on just a trade that, I put in the market yesterday. So this is, again, how I look at price action. Let me just. Sorry, I'm trying to. Not a good day when technology starts messing with you. Okay, so let me. So these are my trades so far in the FX market. I've been short pound New Zealand for a few weeks now on those trades. So here is gold. I got in yesterday at 18.19, closed at 18.24, and I'm making, $11,000 in that trade. And so here was the trade from yesterday. And so it doesn't really matter what the instrument is. I look at everything on a price action standpoint. So you can see in this trade, I was looking at all these key reversals along this support line. I'm still a little bit ambivalent about where gold wants to go. But sometimes you just put a tester in the water. I put a very low risk, and I'm going to talk about risk in tomorrow's session on this trade. And so I just took a poke at this, and, we'll see how that goes. So let's see, could you repeat us? All right, so thanks. A lot of you guys are saying don't worry about I get very discombobulated when things don't work well. So are there any other questions about what I've talked about thus far? So as you can see, I look at everything on a price action, price pattern standpoint. It doesn't matter what it is. Here was the pound New Zealand dollar. I told our members to get short based on the observation of a double top head and shoulders in this. So you can see it doesn't matter what is that these price patterns repeat and they have the same consequences. So here's a double top. Here's a head and shoulders. It looks just like a man or woman's left shoulder. The peak is the head. There's the right shoulder. And you kind of have the neckline here that a neckline is simply a line drawn through the pattern. Once it kind of punched through here, that confirmed that this was in motion. And so I've got a couple of sell orders, in this market for quite some time. I've been short for last week or so. And I expect, the market to come back to this 185, 186 area. So it's about 400 pips away, and I will just stay short. So I've got probably $50,000. Actually, I'm looking at this thing. I'm looking at actually about $70,000 of profit, and I'm not closing it out. I'm looking, for this thing to keep working for me. And so I will stay in a trade for, a couple of days, a couple of weeks, a couple of months, depending on what that trade is. So everyone asks me about stop loss and take profits. It's different on every trade based on what I'm looking for, what the objective is. So Mitchell says, do you move your stop? So I do move the stop, but I don't move it so that I cut off the trade. So it's my expectation that we're going to come back down here. So I'm not going to, put a stop loss here. And if it just arbitrarily comes down there and stops me out. So I will, once I understand the dynamics of a trade, I'll give it room to move. And so I don't want to put the stop loss too close. So my objective is at least 186 on this trade, which is another 300 pips away. And so, it could, go up arbitrarily in the next couple of days. Markets do that. And so I don't want to get just taken out. And that is kind of the discipline. It's the difficulty of, trying to extract the bigger moves. But that's what I'm looking for. In this juncture, I told our members, on a webinar just like this, that I saw a double bottom here, and that likely we will see a price rise after that. And so this went from 186 all the way to 201. That's a $15,000 move for every $1,000 you bet, based on the observation of this pattern in this thing. So sometimes the patterns are dynamic. One gives way to the other. And that's where it gets a bit of a challenge, interpreting which is the governing price pattern, which is the price pattern that's going to govern the next move. And I'm always looking for the next move. So I'm looking just to take a piece out of the middle of, something that's moving one way or another. In this case, I expect this move to come all the way there, and I'm going to look to take most or all of that move. So Daniel says, do you only look at weekly? So I look at what my objective is to understand a trade, Daniel. So, I will peel out and look at the monthly to understand really what's going on in the big picture. So the monthly, so some of these time frames fight each other, right? So that's where, again, the experience and kind of marrying it all together. So this is the pound New Zealand on a long-term monthly. And you can see that on a monthly, this has been in a long-term downtrend. But actually 3-4 years ago, right here, I saw this double bottom on the monthly and the weekly. And I said, you know what? We bottomed in here, and that this double bottom is likely going to be followed by a price rise. And for 3 years, we saw this thing levitate from 165 all the way to 218. And so I was mainly looking at this from the long side, in that I figured that the market had bottomed. But now you can see that we're going back in the cadence of the downtrend. So you'll have a trend and then a counter trend. So the main trend in this is lower. This is a counter trend trade, but you can see how big this move is. So markets, do go counter to their main trend before they go back in. So some trend, some trades, you try and get in sync with the trend, but then I'll also do what I call a counter trend. Well, I'll take the opposite side if there's enough to be made there. So you can see in this time frame, then we started to see the emergence of a head and shoulders, which is a bear pattern in the direction of this major downtrend, which started to indicate that this thing was going to start kicking back. Once it kind of got here, now it's going to kick back in the direction of its trend. And then here you kind of saw a rounding top. And so I feel that we're going to get back into, that's 180. I think we're going to go at least back to this 185 area, if not to 180 or below. So I think that we're now traversing to 185, then 180, and then possibly even lower, because this is the main dominant trend that this is in. So this is the monthly chart where each one of these price bars is 1 month. So now it's, sometimes difficult to obviously trade based on a month, but that starts giving me a picture of the bigger picture. And I want to get in sync with, the bigger move. And so this is now the weekly chart. And so the weekly chart on its way up. So let me kind of put this back in perspective. And sometimes it's, you have to kind of marry all these different time frames, and the market will be, so here is where I observed that I thought we would get a turn. So the market was in a profound downtrend, right? On the monthly and the weekly and what have you. But then right around this area, I started observing this double bottom, made a new low, bounced off it, retested, and now you had this W. And when you see this W bottom, it usually projects that the market will move higher. And that's exactly what happened. Now, in addition to this double bottom, I also noticed the price action. made a new low, close at the high, made a new low, close at the high, made a new low, close at the high, made a new low, close at the high. And right then I bought it. This was in March of 2017 at 175 and took this for a ride to 189. And then it circled back and it made a rounding bottom here, another bottom formation. And then this was all kind of connected with this neckline. So once it kind of made this rounding bottom start breaking out, this indicated that the next trajectory was going to be higher. And then along the way, we had another double bottom right here, which then gave rise to that ultimate, thing. And this was in the height of the pandemic. This was a Sunday night. I had a resting order, a take profit at 211.87. This thing went to 218. I made thousands and thousands of pips on a Sunday night as this thing just, then eclipsed. And then after that, now you can see now this is kicking back into the dominant trend. So you can see we had one pattern here give way to this, and now we have another pattern giving away to that. And so it's really trying to identify which is the pattern that's going to then give you a nice ride. And so here is another head and shoulders right here. And we kicked through the neckline right there. So this basically confirmed, once it goes through the neckline, it basically confirms that this thing is now in a downtrend. And so now, I'm looking for my next. So the next support is around 185 and then 182 and then, around 181. And this is what I'm looking for on this trade. So every trade based on the prevailing trends and chart patterns, but you'll notice I'm not looking at a 15-minute chart, because on a 15-minute chart, you're not seeing all of this history going back 5 years. You're seeing what's happened in the last 5 days. It tells you nothing. So if you're trading short-term charts, you're just basically gambling. You really don't know what's, to me, I try and understand the market that I'm trading. And so, let's see. So I try and I look at the monthly, the weekly, and the, typically I start off every day, on the daily. And if I can kind of, I have a good idea of what's going on all of these time frames. But, frankly, this is a daily chart, and this tells me all I need to know. Now, once again, you'll see that this is just what we call a clean or a naked chart. It's called a naked chart because it doesn't have anything on it. It just has price and time. There's no volume. There's no expert advisors. There's no MACD. There's no nothing on it. Just from this very simple picture, I'm looking to extract 500, 1,000 pips out of this trade. Here is a very simple double top. And then you have, the head and shoulders on top of it. So you have two bear patterns. Both of these patterns are going to govern or dictate, the direction of this market. So once I understand the governing pattern, then I know which way this thing's going to go for a while. I don't exactly know. It's, can do these squiggles, but I think ultimately it's going to end at this destination based on this pattern right there. And so this is the pound New Zealand. I don't care if it was corn. I don't care if it was natural gas. I would look at it exactly the same way. So Pranan says, so for beginners, what time frame will you use, weekly or daily? So it's your choice. Actually, for a beginner, I would look at the weekly, because that, that really reduces the noise. So when you're looking at an intraday chart, this thing's bouncing all over the place. I don't know if I have my intraday charts up here. So this is an intraday chart. I mean, it's hard to tell what's going on here. But if you look at a weekly chart, so this to me, again, so here if you have the ultimate key reversal, made a new high and closed on the very low. And you can see the size of this bar is the biggest bar you've had in years. So the bigger the size, that guy's actually pointing where the market wants to go. So the markets actually point in the direction it wants to go. It's not that the difficulty is, you got to go through all of this junk before it goes in the direction that it was indicating. And so I look at a combination of what I call the price action and the price patterns. And you can see right here, you had a mini double top right here on the weekly, and here is the head and shoulders. And once it cut through this neckline, which is simply a line drawn through the pattern, this was baked in the cake. And now it's pretty much assured you're going to come to 186 and perhaps a lot lower. So Marcus says, is this the same for futures? It is the same for everything. A chart is a chart is a chart. I don't care if it's hogs, pork bellies, soybeans, cocoa, orange juice. This is what Graham taught me. I'm just looking at the price. And so price tells me the story. So these are decisions that are made by buyers and sellers all, over weeks and weeks coming together. And over time, they start telling you right there, when the market was rejected, at this area, this double top, once you have a double top, the market does the same thing every single time. So Marco says, I got a pretty good bull rise on Kronos Group following your teachings. The stock exploded 26% on the opening. So like I said, you can use this for any instrument, Kronos, Moderna, QuantumScape, Beyond Meat, the euro versus the Japanese yen. I look at it. In fact, the best thing is to not even know what you're looking at. That's the best thing, is to take the name off so that you can be objective. Now, if I put this chart in front of you, you don't know what it was, then you could be objective. But the minute I tell you that this is gold, or it's something that maybe you have a predisposition toward, maybe you had a bad experience in gold, or maybe you believe that central banks are stimulating and so gold can't go down, and so you wouldn't take this trade. And so you want to be completely objective. And so the best thing is really to not even look at what you're trading. Just look at the price information in front of you. So Shahani says, is it possible that you could retest the neckline? Typically, you do get a breakout and a retest, but this looks like it's fallen pretty far. But, look, it's gone straight down, all these weeks in a row. So you're starting to get a little bit, stretched out here. Typically, what I like to do is to see a pullback, and then it creates that energy to then shoot it back. But, this is just, falling, and I'm not getting in the way of catching a falling knife. So I don't think this is going to go all the way back to the neckline before it tests this area. So, it's possible that you start hanging out here and it just, here, what is the direction? What is the trend? So that even if it goes up, you're not getting long here. You're not, being, kind of hoodwinked. And then wait for your, key reversal or something that tells you now that it's ready to get back in sync. So you just want to join, the direction of a market that the patterns indicate. Mitchell says your method is all techno. You don't watch fundamental news. Is that reflected? It's all reflected. Price is the news, right? So I shorted Moderna the other day, not knowing what the earnings were going to be. There was no way that I could know what the earnings were. And even if I did, the market reacts to these news events, in different ways. And it's, that the pattern tells you which way it's likely, to be interpreted. So I'm going to end it there. I just wanted to give you kind of an entree into how I look at markets. Again, it's all based on a very simple picture. All you have in front of you here is price and time. There's nothing on this chart. It's just a very simple picture. And from this, I start looking at patterns. Here's a double bottom. Within the double bottom, it was confirmed by this price action, made a new low, closed on the high, made a new low. So sometimes when you see patterns, you don't know if what you're seeing is correct, but then if the price action starts firming, so you can see from that reversal at 185, this thing went $20,000 for every $1,000 you put up in that direction from there. So I'm looking to capitalize on the big moves in the markets based on what the markets are telling me. And once they tell you something, they go in that direction. So if this is, if you look at the scientific principles that we've looked at, once, a market shows a bottom, it typically goes in that direction for 100 days. Not straight up, but when this thing bottomed in 2016 and 17, it went for 3 or 4 years in that, direction. And now once you see this double top and head and shoulders, it's likely to go in this direction for 100 days. So you can see this is already, 1, 2, 3, 4 weeks. So it's 16 days, 4 times 7. So it's 28, 30 days. It's already gone in one direction. So it's likely to go for 100 days in that direction. So that's the value of these patterns. They tell you where the direction of the market is once the patterns have been confirmed. So once you see this double top, and then you have this head and shoulders, so you have really 2 bear price patterns in one. And these are what are called reversal patterns, right? Because leading up to this, the market was going higher. So then if this is a reversal price pattern, it's going to reverse and go the other way. And so these are reversal price patterns. So once the market has indicated that it's going to reverse, it does that. Now you could, again, get a little head fake, but you'll know not to get faked out by that and look to take that in the direction as indicated. So this is what I call the governing price pattern. All this other stuff is just distraction. Once I kind of understand what is dictating that market, then I can figure out, because the market will throw you all kinds of misdirects. I always say the market's like a magician, right? So a magician never just runs on stage and pulls a rabbit out of the hat, right? He's like distracting you with his right hand while he's pulling it out with it. The market does the same thing, right? So it puts on a pattern and then, has this misdirect. So, if you see this thing on a 15-minute chart, you're saying, wow, this market is falling out of bed. I got to get on this move before whatever. And then it goes straight up. Now, why did it go straight up? Because the prior pattern indicated that that was the direction. And so now this pattern is indicating that this is the primary direction. And, for this to end, this also has to end with the pattern. So this has to do something in order to end. It has to come down here and do one of these. And, if I see that where there's a double bottom, then I'll say, okay, this thing is over. Now I'll get out and maybe I'll get long or I'll do something else. But until then, this thing is going to, just, even if it does this, it's got to go lower. So, unless it does an inverted head and shoulders, there's got to be a prior pattern in order to turn this U-boat around again. So there is no indication that there's any juncture or turning point in this. So why get out? Yes, it may just, mess around here, but eventually it's going to make that next leg lower. So Matthew says, this is amazing. I wish I'd found you years ago. Thank you. You are welcome. All right, guys. So Marcos, I'm not going to show other charts today. We could look at 500 charts. I could be here all night. I just wanted to give you a simple overview and introduction to what I look at. We'll build on this every day. We'll look at the markets every day. And, and hopefully after the 4 days, you'll get a foundation. And if you want to go forward, then, you can you can figure that out. So Al said, this is an awesome hour. So I'm glad you got something out of it, Al. And so I'll see you back tomorrow, 4:30 Eastern Standard Time. And good luck with your trading until then. Thanks, Dwight. So John says, nice one. Tim says, thank you, really
No problem.
informative.
See you tomorrow.
All right, thank you, guys.